Hey, what's good, YouTube? It's your boy Lil Man. We back with another video. Hey, welcome back to the channel. Today we got a little dive deep into Forex, right? We're gonna talk about candlesticks and market structure, and those are two pretty basic but very important things that you have to recognize and understand when looking at the Forex market. So without any further ado, let's get into it. Okay, so here we're gonna talk about candlesticks. So what are candlesticks, right? So this is a candlestick. This is what a candlestick looks like in Forex. And this right here is called the wick. Oh, new piece of chalk. This right here is called the body. And this is also called the wick. So this is a wick, this is called the body, and this is called the wick. So now that you know the different parts of the candle, let me just show you how they open and close. Alright, so look, we're gonna pretend price is right here right now, right? So price made this candle and we're on the 1 hour chart. So it depends what time frame you're on. So different time frames mean different open and close times on candlesticks. So if you're on a 1 hour time frame, that means it'll take this candlestick an hour to open and close. And then the same for this one, it'll take an hour to open and close. There's different time frames. There's a 1 hour, the 4 hour, the daily. So if you're in the daily time frame, it will take 24 hours for a candle to open and close, right? So this is a 1 hour, so it'll just take a 1 hour for it to open and close. So this is called close. This would be the open. This would be the low. And this top wick would be the high, right? So this is just, so remember, this is the body of the candle. These are called wicks. But this is how you identify the candle, open and close. So this is the wick, and this is the high point of the candle, right? So this is the highest that the candle's been. This is where bulls push price up, all the way up here. So how candles open and close, right? So let's just say this one opened right here. It came up here, bullish push it up, bulls push it up. So in Forex, I keep saying bulls, you guys don't know what that means. So bulls are basically buyers, right? So that's just what we call them. So bulls are buyers, and I just think of, so like the bulls got the horns on them, right? So you just think up. So buyers are pushing the market up. And if you want to think of bears, just think the bears stumping on you or something. I don't know. Just think of bears pushing you down. So bears are sellers and they're pushing the market down. So whenever I say buyer or bulls, just think up, long, up, buyers, right? And if I say bears, just think sells, right? You're selling. So bulls up, long, buyers, bears, down, short, sellers. And it's also called bearish and bullish. So if it's bullish, that means it's ascending. If it's bearish, descending, right? So you get that. So this candle opened and closed, right? So when this candle opened, this is what happened. Bulls push price all the way up here, and the candle looked like this at one point. So it opened right here, bulls pushed all the way up, and then it came up here, and bulls were way up here at one point. And then once sellers pushed the market back down, it created this wick, right? Because bulls were up here, and then sellers pushed the market back down, so it left that wick right there. And then sellers were in the market, they pushed price all the way back down, all the way back down, all the way back down, right? Sellers are back in the market and they're pushing it down. And now they pushed it all the way back down right here, right? And at one point, this candle right here, without this wick, it looks just like this. But sellers came and pushed it all the way right here. And this is what it looked like, right? And if you guys are not going to be able to understand this, they'll understand the chart. So just keep paying attention. So sellers pushed the price all the way down there, right? And when sellers or buyers came back in the market, it pushed price all the way back up here, right? And it closed. This is where the market, this is where this candlestick closed. because it was open for an hour, did all this thing, bullish pushed it up, sellers pushed it down, and it closed right here, right? So when a candle closes, the next candle opens right next to the close. So if it closed up right here, the next candle would open right here and do its thing. But since this candle closed right here, right, the next candle would open right here. So when the candle first opens, it looks like this. It's just this, right? Because there's no buyers or sellers in the market. It's a new fresh candle. So when buyers come in the market, it pushes price up, right? So it starts looking like this. It starts forming a candle, right? Buyers in the market, buyers, buyers, buyers. And then when sellers come back in the market, that's when it creates a wick, right? Because there's no more buyers in the market. It's just sellers. Or not just sellers, but it's more sellers, right? So it creates that little wick we were talking about. And then sellers push price all the way down, 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 down. But anyways, that's what it looks like. So this candle closed right here and it opened right here. So what happened with this candle is it opened right here, sellers came in the market, pushed price down, and then it came back up. And bulls, so buyers, pushed market up, 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 all the way up here where the high point is, right? Because that's where the high of the wick is. So that's the highest point that the bullish had the market at one point in this candle. And the sellers came in from this point and it pushed price right back down here, and then it closed right here. So that's just how candles work, right? And candlesticks are very important in the Forex market because that's how we identify price action, and that's just how we see price. That's how we view price. And there's also line charts. There's just different types of charts that you can use, but the most common ones are candlestick charts, right? Candlestick, candlestick, candlestick. So that's just candlestick chart, right? So now you know how the candlestick opens and closes, and you know the high point of the candlestick, and you know the low point of the candlestick. So let's do it again, right? So let's just pretend this is where I had it. All right, so this candlestick open, close. All right, let's go to the 4 hour. So we're on the 4 hour, right? So this candlestick open and close, right? It took 4 hours for it to open and close because we're on the 4 hour time frame. So this candlestick open, close. This one open, did its thing, bullish pushed it up. Bullish had it right here at one point. Sellers came back in the market, pushed it way back down here. Sellers had it right here at one point, and then it closed way up here, right? Closed right here, because then the next candlestick opens right next to the close, right? So then this candlestick opens, sellers pushed it down, 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 and then buyers pushed it all the way up, high point, right? Because that's where the highest of the candlestick was, and then it closed right here. So the next candlestick would open right next to the close, right? And then that candlestick was do its thing for the next 4 hours and then close. So that's just how candlesticks work. Okay, so now that we've talked about how the candlestick open and closes, right, and how long it takes to open and close depending on the time frames, let's talk about something else. So bullish and bearish candles, right? So as you can tell when you're looking at this, right, which way is price going? Is price going up or is price going down? Up, right? So that tells you that there's bullish in the market, that big investors, because big investors will move the market. Little retailers like me and you, we don't move the market with our $100, $10,000, $50,000. We don't move the market. That's little money. So big investors, they're buying up the market, right? So buying up the market, buying up the market. Candlestick open, closes, buyers, 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 closes open, buyers, 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 closes open, buyers, 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 right? So that's just bullish candles. Bullish means there's buyers pushing the market up. So the candles are going up, they're ascending, right? So vice versa, bearish candles, right? So what do you think investors do in this market? Are they buying the market? Is it going up? Or are they selling the market? Selling, right? So buyers are, sellers are in the market, and when there's more sellers than there is buyers, sellers take over, and that's what happens. Because there's still buyers in this market, right? Because as you can see, there's a wick right here. So price opened right here, buyers are right here, but then sellers came back down quick because there's more sellers and pushed it down. So sellers, price closed, open, sellers, close, open, sellers, because there's just a lot of money dumping in, being sold, pushing price down. So that's just how you can identify if the market is bullish or bearish. Not candlesticks necessarily, but that's just how you can identify the candlesticks and just understand candlesticks better. Okay, real quick before we switch over to market structure, I just want to go over one thing with candlesticks again real quick. So you know how we was talking about the candlesticks, right? And you know how we were talking about the wicks. Well, the wicks tell you something too, right? So as we were talking about, so let's just say this candle open right here, for instance. Bullish push it up right here. And at one time, this candlestick right here looked like this, right? Because it was all buyers, there was no sellers. But then when sellers came in the market and pushed price down, that's when this wick created right here. And then price closed right here, right? So I'm just gonna show you guys a quick example to show you guys why wicks are important in Forex, right? So in Forex, there's support and resistance. I'm gonna explain over this. I'm just gonna cover the wicks real quick just so you guys can understand. So there's support and resistance, right? And support, just think of it as the ground, right? And then resistance, just the ceiling. So price could move around within support and resistance, right? So price could come here, tap into support, and then come up here. Because when it hits support, that's like you hitting the ground. So when you hit the ground, you can't go further than the ground. So you're just gonna go up, right? So hit support, bounce from there, hit resistance. And when it hits resistance, it comes back down, right? Hit support, resistance, support, resistance, support. So that's just support, right? So every time they hit here, you're thinking it's gonna go up because they hit here before, right? So next time it comes back down here, you're like, okay, it's at support again, so we're only looking to buy. So came up here, and now when it's at resistance, you're only looking to sell, right? So that's just basically support and resistance. So let's just say that we had resistance up here, right? So what this will tell you right here, right? So let's just say buyers are in the market, pushed it up, sellers came back down, closed. This candle, buyers were way up here, right? Buyers were up here at this resistance one time, and then sellers came back. So right when buyers were up here, there was big sellers, because this is resistance, right? So there's big sellers right here. So they sold the market when it came back up here, and then it closed right here. Buyers came back up here again. Sellers pushed it right back down. Buyers pushed it up here. Sellers right back down. So buyers are trying to push past this resistance, right? And there's so many sellers right here that it can't push past it. So these wicks are just showing you that it's getting rejected, right? So it's going up there, rejected. Going up there, sellers, rejected. Going up there, rejected. Going up there, rejected. And then this time, it doesn't even come up here anymore because there's so many sellers. Price just starts pushing right back down. So that's just to explain wicks real quick and just show you how they're important. Okay, so now that we covered candlesticks, right? Let's get into another very, 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 very important topic, right? All right, market structure, right? Very important, very. So look, so make sure you're not sleeping. Wake up, come on. Do what you gotta do, wake up, come on. You ready? All right, let's get it. So market structure, right? So the market doesn't move just straight up, straight down, right? It doesn't just go like this, then go like this, then go like this. That's not what the market looks like, right? There's waves in the market. So market could come up, come back down, go up, down, up, here, here. That's where we're going, right? But anyways, so that's just show you that the market don't just go up and down, right? So there's market structure, and how we identify market structure is price up, So this is price right now, right? So this is just a low. So we have a low right here, right? Price is right here. Price comes up, makes a high. Comes back down, creates a higher low. Breaks above the high to create a what? Higher high. Because this high is higher than the previous high. So it's a higher high. And then price comes back down here and then creates a what? A higher low, right? And this is a higher low because this low right here is higher than the previous low. So it's a higher low. And then price comes up, breaks above this high right here, right? So now it's a new higher high because it's higher than the previous high, right? And then it comes back down here to make a what? Higher low, right? Because this is higher than the previous higher low. So this is market structure right here, right? And as you can see, which way is market going? Is it going up or down? Up, right? To identify an uptrend in the Forex market, price has to be making higher highs and higher lows. If price is not making higher highs and higher lows, it's not an uptrend. And this is very important too. So in an uptrend, you only want to buy, right? You only want to buy. And in a downtrend, you only want to sell, right? Because that's like, let's get an example. That's like, all right, so say this is the ocean, right? And the current is pushing this way, right? Big current pushing that way. Let's say you're trying to swim, right? You're trying to make it over here. Do you think you're gonna hop in the ocean when the current's pushing this way and you're gonna be able to swim harder than the current and be able to make it over here? No, right? So in the Forex market, if price is showing you this, that what? Where's the momentum at? Is it down or up? It's up, right? So you wouldn't go into an uptrend and look for a sell, right? Because that's like you jumping in the water and trying to swim against the current. It's just not going to work because the momentum is going to be going up. So you're going to try to look for a sell right here, right? It's going to go straight up. You're going to try to look for a sell. You're going to get in a little bit, go straight up. So this is not going to work. So it's better to just trade with the trend, right? That's what we call it. The trend is your friend. Trade with the trend. So if it's going up, you're only looking for buys. If the price is going down and market's going down, you're only looking for sells, right? So a bearish market will look like this. This would be the high, right? And then this would be the low. So this is the high point in the market, this is the low. So when price comes up here, what's it gonna make? It's gonna make a lower high, right? And it made a lower high because this right here is lower than the previous high. So it's a lower high, right? And then once price breaks this low right here, it's gonna form a what? A new lower low because this low is lower than the previous low, right? So it's a lower low. And then when price comes up here to test the low, it falls. What's it creating? Another what? Lower high, right? Because this high is lower than the previous high, right? So when price comes down here and breaks this, what's it gonna make? A new lower low, right? Because price is lower than the previous low. So it's a new lower low. So that's just how you tell if price is in a downtrend, right? If it's creating new lower lows and lower highs. If it's not creating that, it's not in a downtrend. So that's basic market structure, right? And so like I said, the market doesn't move just straight up or straight down, right? It moves in waves. So let's give an example real quick, right? So we're in the uptrend. Price is making higher highs and higher lows because we're in the uptrend, right? So this is the low. This is a high. This is now a higher low because it's higher than the previous low. I'm just gonna do this again so you guys get this down, right? Because market structure is very important. So this is a higher low. And then once price comes up here and breaks this high, it's now what? A higher high because this is higher than the previous high. And then it comes back down here, right, to make a what? Higher low, right? So that's just how you identify market structure, right? So now let's see if price is going like this, right? What does this look like? So this is a low, right? And this is a high. This is a higher low, higher high, higher low, higher high, higher low, right? This is still higher low because this lower or higher low is still higher than the previous higher low, right? So it's still signaling it's an uptrend, right? So now price does not come back here and break this higher high, right? It doesn't break this higher high, and instead what it does is it breaks the previous higher low. So once it breaks the previous higher low, that tells you that there's not as much buyers in the market anymore, right? And that market is shifting now because it's not making higher highs and higher lows anymore, and it failed to make a new higher high. So once it fails to make a new higher high, that pretty much means that price is going to reverse. So price comes down here, and this is the new high, right? And then this is the low, and then comes up here to make a lower high, right? Because it's lower than the previous high. And then this is the new lower low, right? Because it's lower than the previous low. So this is just showing you a break of market structure. So the market structure was up because it was making higher highs, higher lows, and it didn't create that new higher high, and instead it failed to make that, and it came down here and it started creating lower lows and lower highs. So that's signaling us in a downtrend now. And now that it's in a downtrend, would you be looking to take sells or buys? Sells, right? Because you want to go with the flow. You want to go with the flow. Trend is your friend. So if the trend is going down, you want to take only sells. Vice versa with buys, right? It's going up, you want to take buys. That's just pretty much market structure, and I'm going to go over the charts so you guys can just see what it looks like actually in the charts. But yeah, that's just basic market structure. Let's get into the charts, man. All right, you guys, before we get into the charts, I actually forgot to talk about one important thing. It's called 3 market phases, right? So what is the 3 market phases? Well, this is very important in Forex because, first of all, we don't go in the market every single day and right when we open our charts, look for a trade and hop in. That's just not what we do. You have to let a setup come to you. You can't just force a setup or it's going to be a bad trade. So market phases helps you identify when you should be looking for a trade in the market. So the 3 market phases are, like we were talking about, bullish, trending market, the bearish trending market, which you guys know about, right? Because we just talked about it. So let's try this. So this is what? The low point, right? This is going to be the high. This is the higher low because it's higher than the previous low. This is the new higher high right here. If I can type it. This will be the new higher low, new higher high, higher low, and then higher high, right? So in this market structure right here, you would only look for buys, right? Only look for buys because price is going up. You want to go with the trend. Trend is your friend. All right. So the bearish trending market, you would only look for sells, right? Because it's going down. You want to go with the trend. So this is the high point right here, right? This is the low created in the market. Now this is the new lower high because it's lower than the previous high, right? And that would make this the new lower low, lower high, lower low, lower high, lower low, right? And then on this one, you can only look for sells within the market, right? All right, so you guys know about those, obviously, right? Because we went over those a couple times. So the next market phase is called consolidation, right? Or ranging. So what is consolidation ranging? So we talked about how the market went up, bullish market, right? We talked about how the market make lower lows and lower highs, bearish market, right? So that's going down. This is going up. Well, the market just don't go up or down. It also goes sideways, right? And this is called consolidation, right? So it's just when price comes and hits support, bounces, hits resistance, bounces, hits support, bounces, hit resistance, bounces. So it's no clear direction, right? It's not breaking and making a trend. It's not breaking and making a trend. So what we do in the consolidation phase is absolutely nothing, right? Because the market, you don't have an edge in this market. It's going sideways. So if you get in, the only edge in this market would be is to buy here, buy here, buy here, sell here, sell here, sell here. But in Forex, it's not that easy, right? So if we have a consolidated market and price is not making new higher highs or higher lows, we're just going to wait. We're not going to do anything, right? We're just going to either wait for a breakout and then wait for market structure, so a higher high, right? Come back down for a higher low, and then we could probably get in around here and then go with the trend, right? Or we're going to look for a break under support, right? So it broke. So that's showing bearish market. Come back and it's going to retest old support, right? Turns new resistance. So price is at resistance now because it broke above or under support. So now it's coming to retest resistance. And right when it starts making new lower lows and lower highs, then we can look and top into trade, right? So that's just telling you about consolidation in the market phases. And this is very important, right? So when the market is turning up, we're only looking to, oh, excuse that, but y'all can read that, right? Buy. When the market's going down, we're only looking to sell. And then when the market is going sideways, we're only looking to do nothing, all right? So that's just the market phase. All right, let's hop on the charts now so you can actually see what I'm talking about. Take my drawings off. All right, so as we can identify this market structure, is price going up or is it going down? It's going up, right? So now let's identify structure. So this is the low point in price, right? This is a high. This is a what? Higher low, because this is higher than the previous low. And then market broke structure, right? Broke this high to come up and make a new higher high. And then came back down to make a new higher low because this high is lower than this low is higher than the previous low. And then market broke structure again to create a new higher high, right? So as we can identify, prices making new higher highs and higher lows. So that's signaling bullish trend, right? So that's bullish. Let's get into bearish. Let's find an example real quick. Alright, here this is good. So as we can identify price right here, right? Which way is price going, up or down? It's going down, right? So we can identify this is a high in price. This is a low. So now price is coming up to make a what? A lower high, because this high is lower than the previous high. And then price broke market structure, right? To create a new lower low, because this low is lower than this previous low. And then price came up to make a lower high, right? Because this high is lower than this high. And then price broke market structure again to make a new lower low. So in this market, we would look for sales, right? Because price is going down. So that's a bearish market, right? Let's look for consolidating market now. Right here, right? So as you can see, what's happening with price, right? price is doing what? Price is hitting resistance and coming back down, hitting support. Hitting resistance, come back down, hitting support. Resistance, support, resistance, support. Resistance, broke out barely, barely. So still resistance, support. So there's no edge in trading this, right? Because market is not making new higher highs and higher lows and continuing the trend. It's not making new lower lows and lower highs and continuing the trend, right? It's just moving sideways. So there's no edge in trading this until it breaks out of market structure, right? So here it broke out. So you wouldn't look to trade anything until it breaks out of market structure and starts trending one way. So that's just consolidating the market. So now let's go over candles real quick because I didn't talk about that. Alright, so how we were talking about the candles open and closing, right? So this is a daily time frame, right? And I only use the daily, 4 hour, 1 hour, and 30 minute. So this is the daily. So every candlestick here is going to represent 24 hours. So like this 24. So this candle right here just opened an hour ago or 30 minutes ago, right? So it still has 23 hours to do its thing and then close. So this candle right here, let's just go over this. So this candle opened, did this thing, closed, and closed right here. And you can tell it closed right here because what? Because the next candle opened right next to it, right? And then buyers pushed it up to here. Sellers, sellers, sellers pushed it down here, and the buyers came back up here, and they came and then closed, right? So that's just how candle did it, right?